Everything you need to know about the economy was revealed in the retail sales data. Why are your online shopping carts full, but your gas tanks are running on empty? This week, retail sales figures were released. We've analyzed results. We've considered several decades of data. We're going to show you the good and the bad, the best and the worst of this month's retail sales. Lessons from the past. Looking back in time, when did we see very similar numbers? Preparing for the future. What are the implications for the trends yet to come? But most importantly, there's a major divergence in this month's retail sales. There's a message within the data. Really quickly, let's revisit the Fed funds futures because they've been on the move. In February, the odds of Feds would not cut rates in the May meeting rose above 50%. That coincided with a hot inflationary data pushing the central bank away from the prospect of a Fed cut. For the next several months, the odds the Feds would cut rates in June remained in favor, at least until very recently. In fact, we're now looking at the prospect the Fed won't even cut rates in the July meeting. This once again was spurred on by more hot inflation data. This week's Beige Book further confirms the market's opinion. The Beige Book published by the Federal Reserve Board found steady economic growth but little progress in reducing inflation. Fed Chair Jerome Powell and others have signaled that reductions in rates will probably have to wait because of a resurgence in inflation in early 24. Why is this important? Lately, stocks have begun to wobble under the prospect that inflation and high interest rates may be with us longer than once expected. But let's get to retail sales because this month's data is quite revealing. Monthly figures, for the most part, were in positive territory. Noticeable winners include non-store retail sales, otherwise known as online shopping, up 2.7%, and gasoline sales up 2.1%. However, on a year-over-year basis, the figures are more telling. Online shopping up a whopping 11.3%, while most other sectors failed to show much progress at all. In fact, despite the strength in non-store retailers, gasoline sales are actually down compared to this time last year. Our premise is as follows. A strong economy has a broad base. Strength in only one sector is a sign of weakness for the rest of the economy. Sometimes it can be very revealing to just dive into the raw data. On a year-over-year basis, non-store retailers are up 11.3%, but at the same time, most other sectors are in negative territory or barely hanging on in the positive region. The overall average of these particular sectors only stands at 2.5%. Compare the current tepid conditions to the strength we experienced in late '07. Non-store retailers are up 8.5%, grocery stores up 4.6, food and beverage up 4.7, and gasoline sales up a roaring 19%. In fact, the overall average stood at 3.7%. While we're on the subject of 2008, notice how the average fell from 2.0 to negative territory during the bleakest days of the financial crisis. Going back to present date, over the past year, the average of our retail sales sectors have wavered between barely positive territory and negative readings. So what's the value in this data? Why is this important? Online sales are strong to be sure, but the economy is not just e-commerce. It is much more. We've all heard of the Magnificent Seven, the stocks that have been absolutely dominating the markets engaged in technology and e-commerce businesses. So of course we would expect strong correlations with non-store retail sales to occur. In white, the S&P 500, alongside surging non-store retail sales. Unfortunately for gasoline sales, the path has not been so easy. Despite a tremendous move higher in stocks over the past year, especially in the past few months, gasoline retail sales still remain in negative territory. In 2008, gasoline hovered above e-commerce until the financial crisis took hold, at which point those sales plummeted as the economy contracted and demand dried up. Fast forward to present day. Well, we've actually already seen that negative crossover occur about a year ago. Does this imply what ensued in the last financial crisis will transpire in the same manner or with the same timing? Certainly not. History does not repeat itself, but it rhymes. The purpose of highlighting the growing divergence between e-commerce and gasoline retail sales is to illustrate the importance of this trend. A strong economy is built on the success of a multiple of sectors and businesses, not just one. We can be easily lulled into a false sense of complacency by the strength of a select few issues on the big board. Beyond sales at the gas station or through a website, there is trouble brewing in the bond market. With 10-year treasuries flirting with record highs, the risk of surging mortgage rates may soon become a reality. The following will take you through what we discovered about the peril in the mortgage spreads.